Starbucks just raised their dividend 8.2%. And that's the only stock I hold in my RRSP. So we're at 614.32, up 15% all time, or about $79. And the position itself, I have 5 shares of Starbucks, and it's only up about 4%. The other 10% is just from the US dollar doing so well, and every other currency not doing so well. So sometimes being invested in a foreign currency can work out to your benefit. All right, so I'm going to get into my buys and sells in my TFSA. And if you're not subscribed already, please feel free to like the video, subscribe to the channel, share the video, and let's get to the intro. And in the TFSA on Friday, we were down almost $400, down 2% in the day. Last week, pretty flat. Last month, down 8% in a single month, so almost down $1,500 in the TFSA. Past 3 months, down 5%. Past year, we're down 11%, and then all-time, we're just down 9%, so down $1,500 since I've started investing in February of 2021. All right, so let's get into the positions. We have $1.57. That was from our Ethereum ETF paying us out. So we can see that Apple is coming down along with the rest of the market. So no surprise here. So everything's being sold off, even like defensive companies like Coca-Cola, Pepsi, Costco, like companies like that are starting to come down too. So people are selling out of absolutely everything, and nowhere seems to be safe right now. But if you're still buying shares and still accumulating shares of companies, definitely a great time to be buying. Algonquin's been on a giant dip, so I actually decided to buy 2 more shares of it to go up to 47. So this will be we'll be getting closer to being able to buy actually one of these shares from just our dividend payments from this. And I also waiting on Aritzia's earnings. It's going to be in a couple of days. So they're going to present on the 12th. So that's why this stock has been holding up fairly well, as Lululemon had an excellent earnings report. So I'm expecting Aritzia to do very well. I'm not looking to sell it. We'll see what happens on the 12th. And BAM's been in a pretty big dip. So pretty good entry point for people, especially if you haven't started in BAM or you have a much higher average than this. Not too bad. And Scotiabank, I bought a full share and then some fractional shares just to get, the ex-dividend date and be able to get the dividend for this for the end of the month this month. So like getting this at 65. So if it falls further, we'll be definitely looking to buy a little bit more. Costco's dropped a little bit, so I just bought a little bit more. We're up to a little bit over a quarter of a share of Costco. If this falls to, say, 400, I'll definitely buy a lot more Costco. I'll definitely focus and put more money towards that. And Enbridge has been doing very well, so very, very steady investment. It hasn't really gone down or anything. It's just giving me a solid, over 10% dividend yield that pays me every single month. So it's really good to have some very defensive stocks that don't really move along with the rest of the market. So I'm very happy with ENS and Enbridge in general. ETHY is one that I'm not very happy with the performance of this one, because as the value of crypto goes down, so do your dividends. Usually in a good quality company, when the stock goes down, they don't necessarily cut their dividend, but with this one, the lower the value, the less the dividend is. But that's just due to the strategy that they have with call options, and they're not going to write as many options and not going to make as much premium income. So it makes sense, but it's been very disappointing to me. So I don't recommend this for someone that relies on predictable income that, is steady or growing. Definitely not a good choice. It's way too volatile for that. And Google's still down quite a bit, down 20%. So I'm still looking into getting maybe one more of this, but there's just so many good deals out there that I'm not in a rush to jump into this one. And HYLD, I actually Completely sold out of DFN, which was the split fund that had a lot of Canadian blue chips, because it just kept dropping in value, and HYLD was offering about a 15% dividend yield, and it's not a split fund. So the advantage of that is, regardless of the price of HYLD, it will not stop paying distributions, whereas DFN, that may actually occur if the market continues heading in a downwards direction. So it kind of just swapped it out. So right now, this one's going to be paying me a little over $25 a month, and I should be able to buy 2 shares and have a little bit left over to purchase some other stocks. So pretty interesting over here. So basically just shifted DFN, sold it out completely, and put like $750 towards HYLD. So this is going to be our largest position right now. So our S&P 500 income focused right now, giving about a 15% yield if you buy at this price. So excellent ETF. They've never missed a payment, and they've been a solid dividend payer. Intel has gone down quite a bit, but all the semiconductors have gone hit rather hard. AMD actually reported negative earnings outlook, and it's going to hurt the rest of, all the chip makers. Nvidia went down a lot as well. With Microsoft, I just decided to put another about $100 into it because it went down quite a bit, so we just averaged down a little bit with a fractional buy. And I also purchased a couple shares of Smart Centers, so we went up from 32 to 35, so this one's giving a little over 7% yield, so I decided to buy a little bit more Smart Centers. And then with TELUS, we bought 3 more shares, so we went up from about 28 to 31 shares. And I'll definitely be looking to get more if it dips even more, because this one generally doesn't dip that much. And then for the dividends earned, we've earned $788.03 in dividends since starting the portfolio. Annually, we actually had a little bit of a decrease because I readjusted the income from ETHY, basically cut it in half. I just took the last 3 months of payments and then multiplied it by 4 to get like a forward-looking dividend yield for the next year. So if Ethereum does recover, then the income will go back up. But as it is right now, I'm expecting it to be pretty low for the foreseeable future. So that's why the income went down temporarily in the portfolio. So annual dividends dropped a little bit. Monthly, we're down to $72.87. Sucks to see this, but it's definitely going to be part of it, especially if you pick a lower quality stock or ETF. Sometimes the dividends do get cut, so sometimes your income can be down momentarily, but generally trending up in a fairly predictable fashion. So not too great in that regard, but that's okay. We'll get back on track and continue buying stocks that don't rely on the share price, which ETHY does. So let me know in the comment section down below if there's any stock that's kind of disappointed you or hasn't really performed up to your standards. All right, and if you're new to investing, feel free to use my link for WealthSimple in the description below. You can get the value of up to $3,000 worth of stocks. All right, have a great day, everybody, and stay invested out there.